Imagine this, $10 trillion quietly shifting its direction away from American soil. But here's the kicker. Hardly anyone noticed. On December 18th, 2025, BlackRock's quarterly investment outlook dropped a bombshell buried on page 47, just one sentence. We are tactically underweight long-term U.S. Treasuries. And that sentence changed everything. If you're wondering why you didn't hear about it on the news, well, that's exactly the point. By the time this makes headlines, it'll already be too late for you to act. But don't worry, I'm about to break it down for you. I'll show you exactly where BlackRock is moving that money, what assets they're buying instead of U.S. government debt, and most importantly, I'll give you a specific action plan, the exact strategy that's protecting trillions of dollars. You won't get theory here, just real, actionable steps. The question is, are you ready to protect yourself the same way the world's smartest money is doing right now? Stick with me because what I reveal next will change how you think about your money. So why does BlackRock's move matter? It's not just a blip. It's part of a larger, dangerous pattern. BlackRock is making this move for a reason, and it's a reason you should care about. You see, the U.S. government's national debt crossed $38 trillion just last month. That number is so massive, it stops meaning anything. But let me make it real for you. The U.S. government is now spending more on interest payments than it does on the entire military. More than aircraft carriers, more than nuclear weapons, more than the world's most powerful armed forces ever assembled. Just interest. Over $1 trillion a year. And that's with interest rates at just 5%. If rates were to go back to the levels of the 1980s, around 10%, the U.S. would be in a nightmare scenario. Interest payments alone would eat up almost every dollar of tax revenue, leaving nothing for anything else. So here's the question. Why is BlackRock pulling out? Are they being too cautious, or do they see something that the rest of us don't? In just a moment, I'll show you what they're seeing and why it's time to pay attention. BlackRock isn't just guessing here. They've got the data, the analysts, and the strategy. And here's the kicker. They've said it out loud. U.S. Treasuries no longer provide the protection they once did. For decades, U.S. government bonds were the ultimate safe haven, the gold standard, the definition of risk-free. But now BlackRock is saying the era of relying on them is over. And here's what you need to know. This isn't just some vague warning. It's a calculated move. BlackRock is shifting billions away from U.S. Treasuries. Instead, they're investing in international government bonds, particularly in Europe and emerging markets. Notice what's missing here. They're not dumping everything into the stock market. They're diversifying. They're building a strategy that holds its value when currencies fail. You think BlackRock is overreacting? I'm going to show you the math, and it's far from comforting. Now, let's talk about why BlackRock's move is more than just a cautious shift. It's a sign of a much larger problem. This isn't the first time we've seen this kind of financial repositioning, and history has shown us how it plays out. Think back to past empires. Spain in the 1500s, the Dutch Republic in the 1700s, and Britain in the 1900s. Each time there was a stage where the system seemed fine on the surface. Asset prices were high, the economy appeared stable, but underneath something was decaying. The debt kept growing year after year, and the rest of the world started getting nervous. They didn't act immediately, they just quietly stopped buying more of the debt. They pulled back. And that's exactly what's happening now. BlackRock's move signals is that we've entered the second stage, the one where the smart money starts repositioning. You know, it's no longer about panic. It's about being strategic, getting out before the crash is obvious. And here's the scariest part. The rest of the world isn't just sitting still. China, Japan, Saudi Arabia, they've all started reducing their holdings of U.S. debt. The question is, are you going to act before it's too late, or will you wait until the signs are undeniable? If you still think BlackRock's strategy is just a precaution, consider this. The data doesn't lie. The biggest foreign holders of U.S. debt are quietly backing away, and that's the real red flag. China, for example, held over $1.3 trillion in U.S. Treasuries back in 2013. Today, less than $700 billion. That's more than $600 billion gone. Where did it go? China has been buying gold every single month for the past year, stockpiling it like they know something the rest of us don't. Japan's been reducing its holdings too, over $250 billion from their peak. Even the UK has repositioned, and Saudi Arabia is doing the same. The smart money is leaving, and here's the part that should make you sit up. As foreigners sell, guess who's buying? The U.S. government itself. The Treasury issues bonds, and the Federal Reserve buys them with created money. It's a dangerous cycle. The U.S. government is lending to itself. This isn't strength, it's desperation, and BlackRock knows it. When you're stuck in a circular system where there's no real demand for your debt, it's only a matter of time before the system cracks. And BlackRock's playbook is telling us it's already happening. Let's break this down further. We're already seeing a series of interconnected developments. First, we've got foreign countries reducing their U.S. debt holdings. Then we've got BlackRock, the world's largest asset manager, shifting billions out of U.S. Treasuries. That's a clear signal, but it doesn't stop there. While all this is happening, something else is brewing. The Federal Reserve is forced to keep buying U.S. debt, creating money out of thin air to fill the void. Meanwhile, the U.S. government continues to rack up interest payments that it can't afford to ignore. This isn't just an isolated trend. It's a feedback loop, a series of failures building up one on top of another. What happens if this continues? We could be looking at a massive shift in the global financial system, one that's already underway but won't hit the mainstream until it's too late. These developments are stacking up, and with every new piece of the puzzle, the urgency increases. Are you ready for what comes next? Now let's step back and look at how this is going to affect you. It's easy to talk about billions and trillions, but when the dust settles, it's ordinary people who feel the consequences. If you've got a retirement account, whether it's a 401k, an IRA, or even a pension fund, you're probably holding U.S. government bonds. That's what's been deemed safe for decades. But what happens when BlackRock, the largest asset manager in the world, says it's no longer a safe bet? When China, Japan, and the UK are all pulling back, what does that mean for your savings? Think about it. The U.S. government can't keep printing money without consequences. If the dollar weakens, your retirement, your savings, everything you've worked for could lose value. And here's the kicker. It's already happening. You might not see it yet, but the writing is on the wall. If you feel like this is familiar, like you've seen this before, say so in the comments, because this is a reality check that's already affecting millions and the clock is ticking. But let's step beyond the panic for a moment and think about why this is happening. It's not just about BlackRock or China, it's about the system itself. What's allowing this to happen? Why does the U.S. government continue to rack up debt? The answer is simple: leverage, incentives, and the spectacle of power. The U.S. dollar has been the world's reserve currency for decades, and because of that, the U.S. has been able to borrow freely, printing money as needed. But here's the thing. That system only works as long as the rest of the world believes in it. Once the faith starts to crack, once foreign nations start pulling their money out, things shift fast. And BlackRock, they're just the canary in the coal mine. They've been watching the numbers, analyzing global trends, and the data doesn't lie. The U.S. is running on fumes. But here's the twist. Those in power don't want you to notice the cracks. They want to keep the game going for as long as possible. And that's exactly why BlackRock is making these moves in silence while the rest of the world watches, waiting for something to break. What's happening is bigger than any single asset manager. It's about the entire financial system, one that's been built on a foundation of debt and illusion. So what happens next? Well, there are two paths we could be headed down. The first is the slow burn. Over the next 12 to 18 months, the signs will become clearer. Foreign nations will continue to sell off their U.S. debt. The dollar will weaken steadily, not all at once, but enough to cause real concern. You won't see an overnight crash, but you'll start feeling the effects. Gold will climb, property values will stay relatively stable in dollar terms, but in real terms, you'll only be holding on to value. And then something will trigger stage 3. Maybe a failed treasury auction, maybe inflation that won't budge, or perhaps a sudden geopolitical event that causes a mass flight of capital. That's when things will go from slow decline to full-blown crisis in a matter of months. The second path, we could see capital controls, measures that make it harder for people to move their money overseas or buy gold. It's not out of the question. The government will frame it as necessary for national security, but the effect will be the same: trapping wealth inside a dying currency system. This happened in Cyprus, it happened in Greece, and it's happened throughout history. The people who survive will be the ones who acted before the controls hit. Are you ready to act before it's too late? Here's the hard truth. History doesn't lie. The people who survive these transitions aren't the richest. They're the ones who saw the pattern and acted early. That's what BlackRock is doing. That's what China, Japan, and the UK are doing. And they're doing it while everyone else sleeps, unaware that the financial system they've trusted is about to change. The next move is already forming. Will you be ready, or will you wait until it's too late? In the next video, I'll break down the worst assets to hold during a dollar crisis, the ones that look safe now, but will be catastrophic when the dollar loses its reserve status. I'll show you exactly what to avoid, especially if you're holding these investments right now. Trust me, you don't want to miss this. So if this content helped you understand what's happening and how to protect yourself, hit the like button. Share this with others who need to know before it's too late. And don't forget to subscribe. We're just getting started.